Hello and welcome everyone. My name's Matthew Hall. I'm the Associate Director at the CQF Institute. Thanks for joining us for today's panel discussion on the skills of the future in quantitative finance. CQF Institute's the awarding body for the certificate in quantitative finance and our membership community for quant finance professionals. If you want to learn more about the certificate and how it can enhance your quant skills and knowledge, you can visit the expo area of today's event or go to cqf.com, where you can download a brochure or register for an upcoming information session. The next information session takes place on February the 16th. As a professional membership community of more than 20,000 quant finance professionals, the CQF Institute delivers a program of insightful events, content, and thought leadership for the sector. If you're new to membership, I'd really encourage you to visit cqfinstitute.com and take a look at our program. Our membership includes access to upcoming conferences on portfolio management and the 50th anniversary of the Black-Scholes model, as well as a number of events taking place in financial centres around the world. A few pieces of housekeeping before we get into the discussion. Today's panel will last around 1 hour and it will conclude with an audience Q&A, but there's no need to wait until the end to ask a question. You're welcome to ask questions at any time during the session using the Q&A button that you can see at the bottom of your screen. If your question's aimed at a specific panelist, please ensure you mention their name in your question. If you experience any technical issues or have any questions about the platform, please use the chat button also at the bottom of your screen, and a member of our team will assist you as soon as possible. So let me introduce you to today's event. I think it's always very relevant and valuable to talk about professional knowledge and skills, but it's particularly appropriate now. This year, the CQF qualification turns 20 years old, and here at the Institute, that's got us thinking about how things have changed over the last 2 decades and how things might look as we move into the next 20 years. We've witnessed huge advances in data science and machine learning capabilities, as well as rapidly emerging areas of challenge and opportunity in fields such as cryptocurrency or ESG. These big issues are reflected in some of the research we conduct with our membership. Last year, 4 in 5 of our members expected career opportunities for quants to increase in the next 5 years. At the same time, 92% expected the skills required of quants to change in the near term. With that in mind, today's panel will be discussing the skills and knowledge that are important in the field right now and what quants will need in the future to mitigate the challenges and take advantage of the opportunities. We'll be talking about how individuals can expand and acquire knowledge, as well as delving into what organizations are doing to acquire and develop talent. We've got an exceptional panel of experts today. They're all alumni of the CQF with fascinating reflections on their own career journeys and perspectives on the sector at large. So before we begin the discussion, I'd like to just ask each panelist to introduce themselves to you. And Katharina, if I start with you.
Hi, everyone. Thanks for inviting me. My name is Katharina Duong-Barnet. I'm the head of business development. So this is probably most exotic in this panel for Quant. But I'm a head of business development for Millennium Global, who's a specialized active manager in FX, delivering currency solutions, both based on quant and discretionary, which might play a role. And previously, I was for about 12 years in quant roles. I'm based now in Paris. Previously, I worked in Frankfurt at Quoniam Asset Management, part of Union. And I helped to raise and create actually the quant business at Metzler, which is a private bank, also based in Germany. And previously, I was on the sell side as a structurer and structuring hedge fund derivative solutions.
Great to have you with us. Thank you. Fabian.
My name is Fabio Decaine. I am director by Deloitte Luxembourg, where I have the opportunity to lead the quantitative risk and valuation service offering. Before that, I gained experience in the financial world as a market risk manager, as a structured product engineer, and as well as an IT quant freelance. And as an academic background, I graduated a long time ago, civil engineer in Belgium, complemented with master in finance and in business administration. And last but not least, in 2007, I earned the CQF, still a good memory. So thank you again for inviting me.
That's great to hear. Natalia.
Thank you again for inviting me to be here, and good evening to our audience. And I really hope that we have a good mix between potential CQF candidates, current students, and alumni. So my name is Natalia Henche, and currently I'm the global head of sell-side risk sales business in Bloomberg. To clarify what I actually do, so many of you probably know Bloomberg as a financial giant, and we are 40 years old, so just 10 years younger than the Black-Scholes model, as we learned. And it's really famous for its news, the terminal, which you probably all know, or the data feeds. But since the financial crisis, Bloomberg recognized the need of the financial institutions to have consistent risk analytics and numbers between the front office and then downstream between the risk and control functions as well. So we embarked on a journey to develop really our ecosystem of SaaS solutions to be able to service clients on that consistent journey. So what I do is within that technology stack and piece is focus on risk analytics, risk management, and regulatory reporting. Prior to Bloomberg, I was a rates trader in European banks here in London. And with that, I would pass it on. Thank you.
Thank you, Natalia. Randy.
Great. Thank you, Matthew. My name is Randeep. I'm Managing Director of the CQF and the CQF Institute. I've been with the CQF for a while now, since actually first got introduced to Paul back in 2009. So I've been part of the CQF since then, but officially since 2010. Prior to that, I was a physicist and worked in the industry. So I worked for Salomon Smith Barney for a while, and also traded futures and options in India, on the National Stock Exchange in India.
Wonderful, thank you. And James.
Hi, thank you very much for the opportunity to be here today. So I started my career as an IT developer at NatWest Global Financial Markets, which became part of the RBS group. And during that transition, I was able to pivot into currency trading, but reusing the IT background to write a number of quant models. I decided to take a career break and went to the US to business school to try and transition into the buy side. And I joined PAMCO, a West Coast of the US based fund of funds, where I worked for 4 years covering discretionary equity strategies and then global quant strategies out of London. And since 2015, I've been at Trium Capital. We're an independently owned multi-manager hedge fund group. And I'm currently working in a consulting capacity, but I used to head up the research function and also chaired the investment management group. And then I was fortunate enough to take the CQF back in 2013. And I'm currently working with Randeep and Matthew on the Portfolio Management Advisory Group.
Wonderful, thanks, James. So you can see a real sort of breadth of experience and career journeys with us this evening or this morning, depending on where you're joining us from. So James, I'll stay with you. Let's talk a little bit before we get into talking about the future and what's coming up for quant finance. Maybe we could start with some of the fundamental skills that you think are particularly valuable for someone working in today's industry.
Sure, it would be a pleasure. I think from a technical programming perspective, this is not going to be particularly controversial, but Python is pretty much everywhere at this point in time. When I got into coding, it was really with ASP.NET, Visual Basic, and then C#. Transitioning to Python was pretty straightforward, but looking back, I wish I could have started with Python. I find it really easy to work with. I've heard it referred as the second best language for everything, which I think is really testament to the versatility of the language. You can find libraries for pretty much everything. Related to that, I think it's important to have an understanding of basic database skills. So understanding SQL will carry you a long way. And from there, it's easy-ish to learn other more complex database languages. And then working as part of a team is essential to understand the workings of Git so that you can share code amongst team members, make sure that work is backed up. Outside of programming, it's obviously essential to have a good understanding of the asset class that you're working within. So understanding the main pricing models that are used and where some of the weaknesses are with them. I think Paul Wilmot in some of the CQF literature does a really good job of just going into detail on the Black-Scholes model and discussing a number of different limitations of the model to really educate us along those dimensions. And I found that to be quite useful in practice. But I think aside from those two, what is also, I believe, really essential to carry you forward is a passion for continued self-driven education. And that can be in any dimension. It can be within finance. It can even be outside of finance, maybe in some of the more interesting sort of data science areas. And I think oftentimes that can lead to a cross-pollination of ideas and actually end up with something that's quite new and novel back within the world of quant finance.
Wonderful. Natalia, your thoughts on the subject?
So one interesting point, just to comment on what James said. So in addition to Python, and maybe Randeep can also echo that, when here in Bloomberg, we are also using Python and giving Python as an option for our users to be able to leverage the data which is already on the Bloomberg terminal, but write their own code, create their own UI, and create whatever they, instead of just giving them the UI or user experience we currently on the terminal. But when I was going to, for example, central banks or development banks or more academia, they are very much, kind of learned R and MATLAB, and so there was this disconnect of what we are offering them and how they would like to, the languages they use or got used to crunch data and visualize data. So that was just one thing that I do agree with James, that Python is probably now, or the variations and new versions of Python is what kind of is dominant. Randeep, you want to comment on that?
Yeah, no, absolutely. So I get asked a lot from potential CQF delegates, what language should we learn? What language should we use? And I always, nowadays, obviously Python, and we fully adopt the Python language on the CQF. So throughout, we're using Python. We have Python labs. We have a Python primer. Prior to Python, it was VBA. But I always think, and because I get asked often, oh, should we learn C++? Should we learn another language? And I always say to them that once you are really mastered one language, then actually transitioning from one language to another is not as difficult as people think. And actually, part of the skill, I think, for quant finance, and one of the things that is really important in quant finance, is being able to implement the models. And actually, Python's a great way to learn, especially if you're new to programming. It's a great way to actually implement models. And once you've learned to implement these models in one language, then often it's quite easy, once you've learned the syntax of another language, to transition over. Now, Natalia, you mentioned MATLAB. And many years ago, I used to get asked a lot about MATLAB. But to be perfectly honest, nowadays, I think nobody wants to pay the license. Nobody wants to spend the money. Why bother when you've got this great tool out there that is free and fantastic libraries? So recently, over the last few years, nobody's asked me. The only time is maybe in academia, where people still, maybe they get cheap licenses or free licenses, I don't know. But within industry, I think people have just turned around and thought, well, we can find cheaper, better alternatives as well.
And I can see some smiles and nods from some Fabian and Katharina there. What are your thoughts on skills, and particularly maybe when we're talking about languages?
As I'm hearing this, and I can maybe add, because I did my CQF recently in 2020, I've seen all of them. Most recently Python, and the discussion was around whether we should implement and build our factor library around Python or around R. And then we had the statisticians who were, on the R team, and everyone else was on Python because it's so versatile and so on. But going back, actually 20 years ago, I wrote everything in MATLAB, like my thesis. And in high school, where I was sort of into computer science, it was, with the godmother of programming languages, which is C, which is sort of the, which is sort of the source of everything. So I guess as long as you have a good understanding of, what is the ecosystem of programming languages and where you want to go and what you want to achieve, I guess I'm with Randeep. I think you can merge into anything you want as long as you master one.
It fits with a question from the audience from Abhishek, who asks, how relevant is C++?
I'll jump in there and just, because again, I get asked Python versus C++ quite often. And I often say it depends on the situation. Okay, so if you're looking to create a model and you're looking to implement a model on a desk, on a trading desk, or something that you're trying to look at some data, you're trying to find a trading model, or you're trying to do something quick and fairly robustly but easily, then Python's fantastic. But if you're looking to a solution for a large organization that's going to crunch a lot of data, that really, then maybe C++. If you're running millions of simulations overnight, then probably you want something like C++. So it does depend on the situation. But I think when you're learning quant finance, actually the skill you're learning is how to take a model, how to take what ultimately is some mathematics often, and implement it, and actually learn how to implement and run that model. So I think, yes, you can do it C++, but there's absolutely no need in the first instance. So I think C++ definitely has its place in the industry, and it will continue. I do think people overplay it, if I'm honest. If you really were able to get into some of the so-called C++ code and libraries that banks claim to have, there'll be C, right? Not C++, and there'll be other things hacked in there. But often they're not visible and people just talk about C++. That's my thinking on it. I don't know what the rest of the panel feel about C++ and its use in the industry.
I would say that this echoes to me, Randy, because indeed C++ is really designed and made for big volume. If you don't use C++ when you have these thousands of mortgages to value or whatever, you might have a bottleneck in the modeling. And that's a very pleasant code to work with. However, when you start to develop in C++, then you have to think about the model maintenance. And then you need to find the adequate resources to ensure the parenting of your model, which is not the case with MATLAB or Python, that has a less high entry cost to assess the model. So that's always a kind of arbitrage to do between the volume and how will I ensure that I maintain my my IT quant environment. So this is this is to be taken into consideration as well.
And we'll make sure we don't spend the entire panel just on languages, although I'm sure we could. But one more question from the audience. Jim asks, has anyone seen much interest in or adoption of Julia as a language?
Not massively, I'm afraid.
Yeah, more like enthusiastic programmers like it because it's efficiency, etc. But I haven't seen it actually yet adopted, and it's a yet, but adopted in the financial industry.
Yeah, and I think sometimes for those of you who are of a slightly older age, so I'm not saying anybody is here of that, it reminds me of the whole VHS versus Betamax argument of many decades ago. One sometimes may be a better technology, but it's actually often about technology that's adopted by the industry and widely used as well. So it doesn't always matter. And I agree with Natalia. Sometimes there are languages out there that are very, very good at doing certain things and probably better than Python, maybe better than other languages as well in a particular, at doing a particular job. But if it's not widely adopted by the industry, then actually, it doesn't get used and it doesn't become popular. So it's kind of that, I don't know if anybody remembers VHS versus Betamax. I think you're all probably too young.
Survival of the fittest, I suppose, with these technologies. I think that sets a really good foundation to move into perhaps talking about some of the skills that are likely to be needed in the future. So So I'd like to ask the panel how they see quant finance changing at the moment and into the years ahead, and perhaps what are some of the emergent skills. And again, I'll look to work in some of the questions from the audience here, as they're very relevant. Natalia, perhaps if I could come to you first of all.
Yes, thank you. So I did my CQF actually in 2009-10, and so yes, I I think that I can remember 12 years ago. Most of the CQF candidates who I studied together with, they came from a background of quants, or mainly engineers, who were looking to find a job in banking and kind of front office jobs. So they had an engineering programming background, and they were trying to kind of understand and learn the financial math, the models, and the risk management tools on top of it. What I see now, I was the only one who was actually a trader who was trying to learn more programming and understand more, how can I apply my pen and paper mathematical skills, and what I do use, the technology I use day to day in trading, into kind of do it yourself way. I think today the tables have really turned, and if I look around in my office as well, independently and what role people have in Bloomberg, whether they're in sales or product managers, data scientists, they're all trying to complement their current skills with signing up to programming courses or data science courses. So I think that to prove a point, we are an employer who is trying to really give equal opportunities. So wherever we post a job externally, we also give our internal workforce like a chance to apply and maybe get the job internally. And so I did a little search. And so we have currently 250 jobs in engineering. But when I looked at engineering or programming as a keyword, there were probably 500 to 1,000 jobs coming up, because there is so much need for anybody that, independently of where they sit in the organization, to have that skill set to be able to understand the programming, at least to read the programming language and understand, that kind of engineering skill set. So that's I think is a very important change of how the industry has changed and how the, kind of like the requirements have changed as well. Another interesting thing, and then I will probably give it back, I have a lot of different examples, is around the requirement to have a professional certificate, specialist certificate, like the CQF or PhDs. So when I started my career back in the early 2000s, outside of the exotic desk or some quant desks, there was hardly any, it was kind of an exotic thing, almost frowned upon, to have a PhD, because why did you lose all this time in academia while you could have been on the trading floor, right? So that was kind of like the approach and the mentality. Actually, just as a joke, I did work with some ex-butchers being brokers. That was kind of the level of requirements. And compared to this, I think in the current world, where really we use technologies and our fingerprints from very early age, I think that wouldn't be sufficient. And now, those quantitative requirements are really there. I don't know if anybody else wants to comment on those or raise their own point.
Natalia, first of all, I want to say big thanks to Bloomberg, because Bloomberg continuously send people onto CQF. So we love that. So that's a great thing.
We don't send them; they come by themselves.
Brilliant! Even better, even better. So I think one of the things that we've definitely seen, and this goes to Natalia's point, is that the industry is becoming more technical. Whatever job you're doing within the finance industry, actually learning to being able to program is pretty much becoming a must. And what I've seen over the years, certainly on the CQF, is a diversification, a widening of the type of person who comes onto the program. So many years ago, it was from particular functions within the industry. That's definitely widened, because the industry has become more technical. The need for being able to use or understand quant skills is definitely much more departments, many more job functions. So we've definitely seen that widening. And I think that's a good thing for the industry. It's a great skill set to learn, and it's a real logical, kind of training and skills. And the other point I'll mention, and I think Natalia kind of touched on it, is this idea of lifelong learning. our industry is very fast paced and it's always changing. So I think people do, this idea of what you learned and finished learning when you were 21, 22, up to 25, and then that was it. That's gone. And you have to keep updating your skills, keep learning, and keep trying new things as our industry changes. So I think that's something that's really important for, when you're thinking about future skills.
Absolutely. And James, I know we spoke a little before this panel, and some of the ways you're sort of testing and sort of keeping your own skill set relevant and up to date were fascinating. I wonder if you'd like to bring those in.
Yeah, I mean, it touches a little bit on one of the earlier comments about self-driven lifelong learning. So I've been fascinated by the concept of a GAN neural network, which stands for a generative adversarial network. And this had been used outside of finance as a concept to have AI play different games. It's been used in perhaps a better known use case recently, which is text to image generation. But the use case that I was interested in was simply just training an AI to recognize a data library of particular photos and then generate new versions of them. There are lots of different data sets that you can find online for free. The one that I used was the Celeb A data set, which is several thousand sort of headshots of various celebrities. And, without a huge amount of iteration, you can quite quickly end up with your own model that can generate new headshots of people, which is a fun experiment to work through. But as I think about how that could possibly be applied back into finance, there is a use case that I'm exploring, which is to generate synthetic time series data. So if you're building out a quantitative equity model, and you've got 10 years of S&P 500 constituent returns, you could train an AI on that data set to generate new returns, whereby the correlation of your new synthetic data through time, it won't exactly match what had happened historically, but it will rhyme depending on how you tune it. And I think that might give a little bit more confidence that your models may perform slightly better at a sample, or at a minimum, you might identify particular environments that we haven't necessarily seen in the real world, whereby your model may not do very well, which would warrant further research.
Absolutely, thank you. And I think we'll probably take a question or maybe a couple of questions from the audience here while we're on the subject of AI. And I can see both Roshan and Anshu are also both keen to find out what impact is ChatGPT going to have, and how could it be used? Who wants to take that one first?
I can take just add a couple of comments. I think it seems, well, obviously it's a bit of a game changer in bringing some of the natural language processing to the fore. The Python examples, I think, are really quite interesting. Obviously, there are some downsides outside of that, where maybe it's making things up or it's not entirely accurate. But I do think we will see PyCharm or VS Code incorporate elements of that as sort of a coding co-pilot. So maybe you could type in a couple of commands. I would like a program to do X, Y, Z. It generates a framework, and then you can go in and tweak it. So I think that will be with us pretty soon.
Any other thoughts on ChatGPT?
Not so much on that, but on natural language processing, if I may. So this is really a big topic for us, because in Bloomberg, obviously, we have a lot of financial time series at hand. But then also Bloomberg is a trading system. Bloomberg is a messaging system. And there is also enormous amount of documents which are kind of shared with us, whether it's, a term sheet or, some kind of financial results, etc. And all that information needs to be processed in a consistent way. So one way, which, for example, which we are working on, and this is more like the technology, the natural language processing which we offer, is that the proprietary chat and emails contain a lot of financial data. I want to buy X amount, etc., but that's written in a text format. So we use natural language processing to pick that data up and translate it into, actually kind of like this was your liquidity, like a liquidity information, which can then feed algos, etc. So there is a lot of use cases. That is just one of them where it's really kind of a number one priority for the banks to look at.
Maybe I'll comment as well on ChatGPT, because I've been playing around with ChatGPT quite a bit, and I have to say it's impressive. I do think it's going to change things and continuously change things in the future, and getting it to write code, Python code, as James mentioned, and then tweaking it is something it can do reasonably well. I think there are limitations, and you have to be a bit careful of it at the moment. And I was talking to one of our faculty members not only 2 days ago, and they were using ChatGPT to try and find some research. And actually, ChatGPT told this faculty member that there was a paper, a quant paper by Sebastian Leo, who's also a lecturer on the CQF, on a particular topic. And he was quite excited. He went looking for it and couldn't find it, and soon realized that ChatGPT had made it up. It actually made up that Seb had written this paper, which I found quite amazing. So I think you probably have to be a bit careful, but I do think it's gonna change maybe productivity, how we do things. Is it capable of original thought? Probably not at the minute, but it certainly can help productivity, I'm sure.
Thank you, Andy. So that's been some really good discussion, particularly around some of the more technical aspects of roles in quant finance. And I wonder if we spend some time now talking really about what are sometimes called soft skills, although I think that's maybe an unfair term. Maybe business skills is more accurate. And a recent survey we did of CQF Institute members indicated a lot of them are spending as much as 20% of their time now working on things like management, leadership of teams. We hear about communication and particularly translating some of these quite complex approaches and techniques to less financial audiences. So I wonder, and Fabian, maybe if I could come to you to open this discussion, what broader business skills do you see as really valuable for quants?
Thank you, but actually you already mentioned a bit, I would say, the two main pillars that are needed for a quant professional in the day-to-day business life. The fact is that when you are a quant, the bias that you might have is that you have paid a high entry cost to gather all these technical skills. But I mean, as long as your career is going by, the fact is that you will more and more need business skills, or as you stated, soft skills. And there are two of them. I would say that the older you get, the higher the likelihood you will have to manage a team. And then to manage a team, you need to lead the team. And then when you start leading a team, you will have to gain all the competencies that you might need as a leader. First one, you need to be trustful with the people. You need to be respectful. You need to have a strategic vision. But in that specific area, when you are a quant professional, you need to be legitimate in your role. So it means that you have to do your homework. So you need to have gained expertise on the job for years, because otherwise you cannot be a leader and you cannot lead a quant team if you don't know what they are doing. So it leads and it goes to, I would say, the second soft skill. It's not only leadership, but management. So if you want to be a manager that is doing a bit more than planning the vacation, you need to ensure, and I think that James mentioned that, you need to ensure that the people that you hired, that themselves are very technical, will keep on be given the opportunity to keep on self-developing themselves. Because I mean, you might have learned a bit of quantitative finance, but it never stops. It's a lifelong learning. You started, and each and every month you will realize that you don't know something, and you will learn something else. So your role as a manager is to ensure that you open the doors for your people to grow. And that's the way you build a team. That's one thing. One key thing, and I realized that through my career, is that I think, that's an open point that I'm addressing to all the panel. I think that we all have a kind of cognitive bias I mean, we learned a lot. We did engineering, we did the CQF, but I mean, we learned it was difficult by the time, but as we are doing that on a day-to-day basis, we tend to think that what we do is easy, and we might over-complexify the language we use with non-quantitative people. And we might have a tendency as well to think it's easy, so there will be a mismatch that is created with our business partners, with our colleagues. And if you go to that point, it will create frustration, miscommunication, and if you are in the business world, you will have opportunity cost, because if people don't understand you, you won't do any kind of business. So that's one of the key things. And the CQF, I think, I don't remember who mentioned, Paul was explaining very well, actually, the Black and Scholes model. The CQF helped me a lot, because when you are very technical, you need to come with intuitive words and natural speaking. You need to get rid of the equation. Nobody cares if you are not a quant how you implemented a model, that you are proud of having coded a Levi process in C++. You are proud of yourself, but people don't care. So you need to catch the equation, and exactly like the CQF proposes in the different classes, come with a intuitive language. If you do that, you create the communication, you bring quantitative finance to non-quantitative people. And when the connection is created, I would say the job is done. You know, the job is done, and you can move forward. So I would say that, and it's a major part, actually, when you are a quant professional, this soft skill, because leadership and management will allow you to work with qualified people, to keep them on board, and communication, so smoothen your communication, will allow you to expand your network and not to be alone on your island with your equation and programming skill, should it be a Python or C++ or whatever kind of language. So I don't know if anyone has a comment or want to corroborate the thinking, the thoughts.
Katharina, I know in some of your comments before the panel, you talked a little around the sort of evolution of career paths and the idea of a quant CIO.
In terms of how you can develop and hone your skills and how you can advance your career, I guess you should always have in mind what you want to achieve, be it creating a hedge fund like James, or becoming the CIO. Always bear in mind what you want, or you want maybe to stay in your area and become the expert at a specific programming language or at a specific product. But I think with that in mind, you should make a list of the skills that you want to acquire, and then be resourceful about it. Either look for companies that might support you in your quest for continuing development. For example, by acquiring the CQF or other things. But I think I guess, to me at least, the most interesting path was to look for a broad skill set, as broad as possible, especially in the latest role that I had at a quant asset manager, which was purely quant, and it was not an investment bank that was mixed between discretionary quant or anything. There was so much value attributed to people that were able to communicate, as Fabien said, that were able to communicate not only to clients, because in the end, most of our clients were not quant, clearly. And I guess this applies to most asset managers or most people who are building products, unless you're on prop trading or in a hedge fund, that you have to transport the message. And I guess it's the skill that is the most underrated, I guess, among quants. So it's like, you know, the one with one eye is the king among the blind. So if you look for complementary skills, especially in quant, to, for example, to pitch products or to pitch a product idea to your CEO, to obtain sponsorship, to be able to obtain a research budget for a certain strategy that you want to develop, I guess it's very important to hone those communication skills. And I'm speaking about formal and informal skills. So a formal type of honing your information skills could be, you know, booking a coaching session for presentation skills, and learning the rhetoric around it. But it could also involve, informal training, because you know that you want to develop and progress in your career, that you look for opportunities where you can, for example, present a product or present an idea or a trade, whatever it may be. So I guess there, and as Fabian also said, leadership. There's, I guess, the more you progress in your career, there's less academic qualifications like the PhD or the certificate in finance or the CFA that certainly got me into some of the previous jobs. But I guess as you progress, the more you advance, the less formal those requirements are, the more it becomes like informal education, like business coaching, understanding how business works, understanding how to create motivation amongst the team, how to build a team, and so on. So I think it's lifelong learning, but in different directions.
I think, without trying to repeat what Fabian and Katrina said, I would totally agree actually with both your points. I think communication skills and explaining technical concepts to non-technical people is sometimes forgotten, within the quant community, and actually the importance of it is sometimes forgotten within the quant community. And also the idea of being able to explain things in an intuitive way. I think that is so important. I think, when you're learning quant finance, it's so it goes without saying, you need to understand the mathematics. You need to be able to program. You need to understand finance, because you need to understand the domain that you're working in. And that goes without saying. But actually, it's so important to be able to explain those ideas. And I remember, it reminds me of many, many years ago when I was in physics, when I was doing my PhD in physics. And my supervisor said to me at the time, he said, if you can't explain physics to a barman, you don't understand physics. And the idea was very simple, is that if you really understand a subject, then you've got to be able to explain to somebody who's new, who's not technical, who, and you have to explain it in a way that's intuitive. And I think that's also one of the things that attracted me originally many years ago to Paul, and how Paul taught quant finance, because he really, it's sometimes so easy to get caught in the technicalities and talk. And don't get me wrong, he can be very technical, but also how he explains things, and Fabian, you talked about it, how he explains things in that intuitive way and actually makes it quite real. It makes a difference. And that's something that we've always been very focused on, the CQF, that idea of being able to explain things with both mathematics, but also intuitively as well.
So I completely agree with you there. I think a feature of quant finance is a lot of the pricing model techniques are named after the authors. And if you're coming at it from the outside looking in, trying to read the literature by yourself, it can sound quite off-putting. So one of the simpler fixed income pricing models is Ornstein-Uhlenbeck, which when I heard that, I was like, okay, I don't know how complicated this is. It was explained to me through the CQF, it's drift and diffusion. Well, that sounds a little bit more understandable, but what is that? Well, it's a straight line and it wobbles around. Okay, well, the barman can get that, Randeep. So I found that to be really useful. But I'll add, as a CQF alum, you get access to the lifelong learning. And I find that a really rich source of inspiration to find things you want to dig into. So over the recent holidays, I took an advanced portfolio management elective, which was taught in a way that I hadn't seen previously. So that was really helpful.
Natalia, I wonder if I could come to you for your thoughts.
Yes, thank you. Slightly different. I think one thing which we often forget is I think that when we come out of academia or have a career already in a large organization, I think often people forget that we need a certain amount of entrepreneurial mindset. And I think to say that those colleagues of mine who, for example, back in university, they were already, and that was a long time ago, interested in blockchain, for example, and then chose not to join a bank but chose to kind of set up their own either crypto fund or liaise with all the banks and get investors and get some kind of technology startup, they firstly gained a very valuable experience, but also then became incredibly rich in the process. So what I'm trying to say is we need to be able to also take risks, be able, as you said, communicate the vision, for example, to internal stakeholders, whether it is a quant project you want to or you want your way of something to be implemented. All that needs a lot of negotiation and bargaining skills, which come with communication. So beyond just explaining the models, and then just really like a very broad-based skills to run a company or to run a business or run a team. Those things need additional skills, which can look very haunting when you start off on your career. But for those who are able to do that, I think that there is a very different and very interesting path out there.
Thank you. I can see a lot of wonderful questions coming through, and we will get through to as many of them towards the end as we can. With that in mind, I wonder if we just spend a few minutes on talking about talent. So I'm really interested to get the panel's reflections on how, and perhaps this is from an organizational perspective, are we ensuring that people coming into the industry are getting the right skills and knowledge? How are they being developed? How are we identifying that talent and making sure that it's sort of future-proof, future-ready? And Natalia, I'd maybe come back to you here because I know Bloomberg's doing some interesting things in this area.
Yes, thank you. And just 2 points. I have a lot of those ideas there, but I think one thing to start with, I think when I now interview new talent, often the most important thing for them is not even how much they're paid. It's not exactly what the job will be, but they need to be inspired by the organization. They need the organization to have a mission which is beyond enriching the shareholders. And that, I think, is a very important part. And Bloomberg definitely kind of leads in that way. Mike Bloomberg, our owner, is a pioneer of climate change and trying to stop climate change through the UN now as a special ambassador for that. So and also sitting in a lot of different organizations which are representing or trying to solve from different angles global warming. So I think this is one thing which I think we often don't think about, but the new generation especially really needs that additional inspiration from the company. The other thing is, and I'm sure everybody is kind of like working with that in their organization, is diversity and inclusion. And I mean, we are members to a lot of organizations, women in derivatives, women in engineering and leadership in development, etc., and trying to partner up with them and try to, through them, kind of motivate young girls or women who went out of the workforce because they had children or had to care for people taking care of their parents, to kind of return into the workforce. So that kind of, and that really creates diversity and different type of mindset. But one thing which is very interesting for me, now it's more than just gender diversity. Now we are talking about, for example, neurodiversity. In my career, I'm sure that I had worked with few people who had, who were on the spectrum, maybe they were slightly Asperger syndrome. And I think that they had a very difficult time because the organization were not able to kind of like accommodate for that, especially when you are in a client-facing or communication function. And I think with deepening the understanding and the education, we will be able to, work with their talent and give them much better opportunities and enrich our organization as well.
Yeah, I'd like to add to that because I'm working at a small organization right now, and the two people who have a CQF is me, who's in business development. I guess it's quite unusual, and the other one is our CIO. So what I appreciate around the CQF bringing respectively both of us into those positions is that it's technical and it's giving you a broad horizon and a broad understanding of what is current with the practitioners right now, because obviously the CIO has to lead a team of several people, and they range from astrophysicists to physicists to people who come from computer science. or from more of a business background. So they have to understand how model validation works. They have to understand how to create and shape a trading strategy and to formalize it. At the same time, the CQF, for me, it's like it has a very different. There's a different aspect to it. It enhances obviously my credibility around selling quantitative strategies. But what I enjoyed the most about the CQF, and I think where it's very versatile, and I hope it stays like this, is that it's always hands-on, and you as someone who's going through the CQF program, you have the opportunity to pursue some projects in depth and sort of build a passion around it, and also transport this during the interviews or seek a job or let the CQF guide you towards a job that is of interest to you, or towards that hedge fund who is doing volatility arbitrage, or that investment bank where you're doing vol models or whatever. So I really appreciated the broadness of the program.
Absolutely. That's an interesting reflection. And Fabian, I know you spoke before the panel really about, talking about some of those sort of projects and activities that you can give to talented people to keep them stimulated to test their skills.
Yeah, and it actually depends as well on the location. So here in Luxembourg, we have the opportunity not only to carry out kind of model reviews, but implement them as well. So the goal is that, first of all, what is important when you find someone, I'm personally looking for agility. And exactly what the CQF brings. You need to be agile. It's not specifically that you need to know by heart everything. You need agility, and you need to be a kind of fast thinker. And then, from a project point of view, what we are trying to do is really to ensure that our talented juniors can go from very analytical design, so a review of a model, which will help them to tackle the mathematical skills, but as well kind of engineering when they can design a risk management framework or evaluation model from A to Z. So they will use the programming skill, the environment, because it's not only a model that you need to develop under a Python library, but you need to plug that into a system. So we try to open the door as much as possible to feed them and to ensure that they are proud of their work.
Any other thoughts on sort of bringing talent forward and helping to develop people coming into firms?
I'll just add, I think it's important to ensure that they have a purpose, in the sense that they can see why they're doing the job that they are, that there's an understanding that there is progression either within your organization or within the industry, and encourage them to continue to learn and develop new skills.
I think I'll just add to what James just said there, and actually what I think that the panel as a whole is saying is that we see a lot of organizations sending people onto CQF as a talent retention tool, because if you've got talented people, they want to keep learning, they want to keep doing new things, they want to keep trying ideas, and if you don't give them that opportunity, to learn, then they will go somewhere else, because they're able to. So we see a lot of organizations will use it as a talent retention tool, really engaging their people.
Thank you. I'm going to move on to questions now because we've got lots of them. So let's see how many of these we can get through in a reasonable amount of time. So let's start with Sudarshan, and James. I'm probably going to point this one towards you. What specifically do hedge funds look for in a quant trader? That's
a good question. I think evidence that you have either built a model through full life cycle or you've done something that's quite comparable. I think if you're coming at this from a data science perspective, there are some useful parallels here. A good chunk of data science is exploratory data analysis. You really have to understand where the data is coming from, get your hands dirty. A good starting point for that could be something as simple as Kaggle, but they provide the data to you for one of the online competitions, as an example. But if you're coming at this from scratch, you need to get the data yourself. That could be, you could be consuming it from one of the main platforms, but unless you've actually gone through that stage of working with data, you won't necessarily know where some of the pitfalls are. So, for example, with working with economic data tends to get revised. So you need to know what was actually available to you at a specific point in time. If you're working with, say, lower latency, say, tick data, you get all kinds of junk in that price series. You could have, let's say, a dollar yen price series that's going around 130, and then suddenly the bid drops down to 10 and then pops back to 130. And that's in your historic prices. So you need to pay attention to what you're actually ingesting to feed the models. Then you obviously need to do something with that, come out with some useful result, and then run that in practice. Marcos Lopez de Prado is a very strong advocate of being very careful about trying to, well, obviously to avoid some of the issues with backtest overfit. And he has a great paper that's probably about 6 or 7 years old, where they draw a mathematical framework to determine, based on the size of the data set you've got, for a certain number of backtests that you're running, at some point you'll be more than 50% likely to have overfit. So it's being aware that you can't just, try every possible combination. You can obviously make things look really, really good in a backtest. Similar to data science, I mean, that's all, very intuitive now, where you have your 80-20 train test splits as being quite a common approach to take. But then the final piece is obviously, life cycle management. At what point do you actually start to trade the model? What do you do if you get unusual results versus the backtest? At what point do you turn it off or, add new things? So each one of those components is a significant skill in and of itself. But as a quant on a hedge fund desk, you kind of have to do all of that, or at least be a part of a team that is doing all of that effectively.
Wonderful, thank you. Great answer. And a question here from Martins, and perhaps I suppose anyone can jump in and contribute on this. But he's someone who's recently started learning data science. He's currently studying a finance-related degree at undergraduate level. He's planning on taking the CQF after graduation, which is absolutely fantastic. But it's curious, what roadmap should one be looking for a quant finance career? So perhaps anyone like to weigh in on some advice of what someone could do to sort of turbocharge their journey?
If I can maybe my mind maybe to start and to try to have a little background on in applied mathematics. Only that, not continuous equation, but yeah, in applied mathematics, the discrete world of mathematics, that would be a good basis to grow in quantitative finance. But that's my personal experience.
Yeah, I'd have another suggestion, but that's also due to my profile. If you're unsure of how to get there, you should also look into where you want to get to. And a place where I really learned a lot and had a lot of insight into what practitioners' roles could be in quant finance was in capital markets. So if you sign up or if you apply for an internship in capital markets, there are so many roles that you can look into. And even if your final goal is to work at a hedge fund on the buy side, but in capital markets, there's so many different roles, many of them quant related, that you cannot judge from the outside. So if you have time and you're at the very early stage, I think an internship in capital markets is a superb entry, because you see structuring, trading, sales roles, over 200 different roles across all different types of asset classes. That gives you a clearer idea, and you will meet many people, obviously. That'll give you a clearer idea of where you want to go and how you get there, I guess.
Further question from Eduardo. He asks if the panel sees a substantial increase in adoption in the industry of machine learning for option pricing. So where do we see machine learning for options in the near future, he asks.
I do not see the market is mature so far, but at least down here. So I haven't seen yet a lot of use of machine learning techniques for option pricing or even though calibration, which do not prevent to be part of the future, but so far not a major thing, at least from what I observe, which is more local.
Yeah, I'd agree with Fabian on that. I haven't seen a huge amount of ML for option pricing, but I do think it is an important market to, or rather an important derivative class to keep an eye on for any sort of underlying market. So particularly in some of the US mid-cap names, the stock prices at times can be really whipped around by option flow. So that is something to, to keep an eye on. Possibly even, build a factor around it for one of your multi-factor equity models.
Exactly. Yeah, and maybe when you switch to a more illiquid world, that might be something that will trigger and that will allow to feed and to ensure that illiquid world with low market data might become a bit more liquid or a bit more smooth for all the inputs to the model. Maybe that's something. Yeah. Yeah,
I mean, I think it's also important to have the right input into the model. So, rather than day-to-day closing volatilities, you'd probably want to look at something a lot shorter, like 1 to 5 minute moves on an intraday basis, particularly if you're looking at short-dated options.
I'll ask one more question, and this one's quite future-looking, I suppose. How relevant is quantum computing for us? And what I would say to the person asking the question, Akhilesh, we actually held a conference on this last year, and I think the recordings are still available. So we had all sorts of experts weighing in on this. But I'd like to ask the panel, perhaps, in terms of the future technology, quantum computing, your thoughts.
We did have a research panel on quantum computing, but it was more in the management area, because they obviously have to make sure that we're having the hardware to be efficient. But I didn't see it to be a skill in the quant developers, to be honest.
I maybe make a quick comment. I think it's early stage. Yeah, it's interesting though. It's interesting how it'll develop and what'll happen. In fact, but it is early stage. We're actually introducing for this current program that we just started a new advanced elective actually on quantum computing, which is going to be actually offered out to the alumni. It's probably going to be out in the next couple of months, which is going to be a one-day workshop for alumni on quantum computing, which is also going to be an advanced elective. Which will be interesting and really, but I think it's early days yet. I think it'll be interesting to watch the development and see what happens.
Yeah, I'd agree. I think it's more theoretical at this stage, but the world changes quite quickly. So it's on my radar, but it's not something I'm planning to really dive deeply into until the hardware's a little bit more accessible.
Although, James, you now have to come to the workshop. You do realise that.
Oh, I'll be there for sure. It's a good way to, make sure that I've got the right answer next time I'm asked.
Wonderful. Okay. Well, I think we'll leave it there as we're a little over time now. Thank you for all your questions. I can see the panelists are furiously working away trying to answer a few more of them in writing. So apologies if we didn't get to yours, but we will try our best to answer them. That just leaves me to thank the panelists today. So Natalia, Katerina, James, Fabian, and Randy, really appreciate your time and your input, and I can see that the audience do as well. And that just leaves me to thank everyone that's attended today and joined us. You can join us again next online on the 9th of February, where we'll have an event on machine learning in systematic futures allocation. We'll be hearing from Tony Guider there. The recording of this session, if you want to go back over it or you want to share it with any of your colleagues or peers, will be available via your membership within the next few days. So Thank you everyone for attending, and goodbye.